All right, hello everyone. So I thought let's just do something practical. As you know, I always say the best place to learn a job is on the job. All right, and so let's take a look at this gold to see where we're at. Now, as you know, we all have the swing days way before, okay, like ages ago. So we've got the swing days, we've got the swing hours for the days, right? So we've written it all out. So we know what we're doing. So we know what day the market is swinging and on what hours. So here it is. Yesterday was a swing day. Now, yesterday I didn't do anything because I figured the market should do a better retracement than just that and possibly push down further, before we buy. So I was hoping to end up lower yesterday, not higher, and buy from a lower level. Okay. However, the market didn't do that. Okay. The market didn't do that. The market just shot up all the way up from beginning to end, making this a great swing day. Okay. Was I hitting myself because I missed it? No, I wasn't. Okay, no, I wasn't. Could you have taken this? Yeah, you could have taken it. You could have taken it because the market was going sideways. You could have taken it because you know time. Okay. The market was going sideways here, as you can see, or you can't see maybe. Here we are. Okay. And you see the trading hour here makes a breakout. So once the market breaks out, you can go long here because you understand this is the trading hour. So it makes sense, right? And that's your breaking hour, right? So the market is trading hour, and then there's the breakout. That's your breaking hour. That's your goodbye kiss coming back. So if you enter anywhere on the breakout or even on the goodbye kiss, your stop loss should not be any lower than the maximum, the low of that. So just at 2,742 there. Okay, so if you went in long, let's say here, it shouldn't be any lower than that. Why? Because if that is correct, the market should not go lower after it went up so much. Okay, because it made a move already, it's gone already. And if the hour is correct, it shouldn't. Now here, for example, this is also a trading hour, but the market dipped down. It dipped down, but it didn't really crash down or anything. It's just mucking around here, and the next trading hour is coming up. Okay. Now, what's good with today's setup? Now, first of all, as you know, in the video I said as well, I said, guys, look, if this is a swing day, that's the impulse. We'd like to see a good retracement. Okay, and a good retracement for us is below 50, 37.5 ideal. We could still get there today. The market doesn't have to go up just because we bought it, right? It can still come back down. And we've got the weekly pivot here. And the 25 from the 2742 comes to us from the daily PST. So those levels are still on the radar. Okay, oops, not this one, but this one. Right there, 58, 2742. So they're still on the radar. And if you think about it, once the market made a move up, it's logical for it to come back a little bit, fill in a little bit and so on. The reason I decided to enter here was it wasn't really on the daily pivot, but it was close enough. And the trading hour was good. The sign for it was good. And because it was a good sign for it, I figured I'd take it and immediately shared it on in the club members area. And the beauty about it is there's a 4-hour gap here. So if I'm right, the market should, go into there. And if I'm wrong, it should fall into there. If it falls into there, it's not a problem. I just had a $2 stop loss, right? $2.21. So no big deal. If it does go up, then it shouldn't crash down really until we come into this zone. And if it does that, that would be a surprise, but it could. But nevertheless, because the aspect was good, the calculation is good, a push already covered the trade. Now the stop loss, if you've got a $2.21 stop loss, I think I put $2.50 take profit, so I covered it and the spread as well. So it's a covered trade. There's nothing to worry about. And this is why it's important for us to understand that if we get a right time, the right price, things move pretty quickly in our favor. Okay. And like here as well, a right time and a right price. It moves quickly. So when it moves quickly, you understand, okay, this is a zone, right? And then you can push up. Once the push is done, your stop loss, again, like I said, it's a 1 bar stop loss. Okay, you don't have to put long distance stop losses away. And then follow it through. Okay, so two things can happen here. We come down lower into a better price, okay, and we're still okay to buy it, if that pans out. The second thing is the market can come into the low of the London session, stick around there. It could also stop us out there and then take off too, okay, which we can think about then entering again, okay, because we're in a free trade, and that's basically it. Now you have to understand here, there's a gap there, plus even highs here. So what does that mean? Well, that means if New York wants to push this down, they may first want to come up and clean the stops behind the even highs, right? Because this is a place where they sold heavy. So it's only logical we cover the trade quickly, okay, and don't muck around with it, okay, and just, see how it goes. And the second thing is, if it does go up and then fall back down quickly like it did here, right? It goes up, falls back quickly, then you've got to get out of the trade, okay? So, this is how you manage the trade, and that's how it is. So the trade can go in our way, it may not go in our way, but the important thing here is we get the idea of what's going on with the trade. If it's moving quickly, you can cover the trade quick, tight stop loss, you got a quiet head, and that's it. You can even hit the sack if you're in a time zone where it's in the evening or late night. I also hit the sack the other day with the euro dollar, okay, because one position was open here, okay, there was one position open here. One took profit, it took profit around here, and then the other one was open, it took profit down here, okay, so it's all good, right? And with the euro dollar as well, if you're following it, look, this is for example, this. Okay, it's a tricky trade. Why? Because euro dollar, remember your swing days. Okay, let's come into here. That was a swing day Tuesday. So you don't want to be like going against your swing day. Also, today is a swing day, isn't it? Yes, it is Tuesday, Wednesday. So Tuesday, Wednesday, 2 days, like pushing, all right? And I did say today as well in the video, I said, guys, this is a sideways market. So if the market goes up into this zone in a trading hour, you can sell. But you see, it hasn't gone there on a trading hour. We don't have a trading hour yet. But what has the market done here on the euro dollar? It's breaking down. So if it breaks down in New York, it comes back up, then you can sell again. Okay, if it's a trading hour. If it's not a trading hour, just let it go. Okay. And when it comes to managing gold or any trade you're in, okay, just keep your eyes out for the next hour. You don't have to do anything here. You don't have to sit in front of the screen. You don't have to do all kinds of stressful moves in front of the screen. It's a free trade, let it ride. Don't forget to fill in your journal. Okay, you see I've got it all filled out here. Okay, the only thing missing is the bottom part, where I'm going to afterwards do a post-mortem. Okay, but I understood that this is a good hour simply because of the timing conditions that were there. So getting in there was okay. All right, just a little short video on how you can trade it, and this is how you can trade also stress-free. Just make sure you're getting in at the right time. If you've taken timing from me, you know what's a good time, you know what's a tricky time, and you know what's the time where you just don't want to be there. Okay, so you know those hours already, and when you know them, you won't be pushing your luck. Okay, trade when your timing calculation and your price are like, yeah, this is fair enough, and then bang, you can go it in there. All right, all the best. Have a good one. See you next time.